So look, I'm going to talk about on what you should sell, what I'm selling right now, pre-crash, during the crash. It's going to get worse. Look, got my book, Wake Up and Smell the Real Estate. Been a bestseller Audible and on Amazon and Kindle. Urge you to get the book. It's a prerequisite to be in the mentorship. I turn people down in the mentorship every day. I also accept some people almost every day. So look, if you want to be mentored by somebody that's made tens of millions of dollars over the last 40 years, I don't talk all this bullshit, hack, chop, wedge deal, all this other bullshit, but I've been doing it a long time. And I'm going to take 100 new mentees, and then I'm going to cut off for a while. But I'm only looking for people that are qualified, and I can just give you a real quick common sense. You got to have common sense. I'll take somebody young if you got to demonstrate common sense, and you got to show that you got some money saved. And it's not that I want your money, but if you don't have some money saved, you probably need to concentrate on getting a skill more than you need to do this right now. You need to get a skill. Everybody needs a skill. You got to make certain. You got to make some money and make yourself valuable to your boss, or be self. I've been self-employed since I was 19, so I don't know anything else. But there is fantastic opportunities coming, and there's some real tough times coming also for some people. A lot of people probably should have been in this mentorship are going to regret that they weren't, because they're probably stuck in some stupid investments right now, and there's a lot of them out there. Fortunately, my students are not stuck in anything bad. I have a handful are, and they're the ones that joined after they realized they kind of screwed up. Hey, Chris, good morning. Hey, afternoon. Summers from England, nice. Afternoon for you, morning here. Anyways, so look, I'm in front of one of my buildings right now. I don't even go in. This is one of the houses. I'll show you. I own this house here. I also own that house there. I also used to own that one across the street. I also own another one down the street. I also bought and sold 2 on the next street, bought and sold 1 on this street. And we're going to drive by a couple others that I still own. The reason I point this out to you is because people think, oh, the deals are always somewhere else. No, the deals are right here at home. It's because you don't fucking know. And a lot of people are like that. They think they know. And, it's very serious. It's like some idiot, when people talk with very strong, point of view with this much experience, it's stupid. I'm just telling you. You don't know what you don't know, okay? Look, there's a lot of things I don't know, and I don't pretend to know, and I don't have a strong opinion about things that I don't know. You got to be willing to accept that there's things you don't know. And that's why a lot of times somebody, I just want to know about this. I've already read all kinds of books. Well, fuck, you didn't read my book. I don't give a shit. You're falling for all the bullshit. There's a lot of these guys like to think, oh yeah, you want to learn about a wedge deal, or you want to learn about, wholesaling, or, that's like a library. Oh, I got it all. Well, they got everything but experience. They got a little library where maybe they've copied other people's shit that's been done over the years, but they don't have experience. Listen, a mentor makes a difference. You got to know how to negotiate. You got to know how to respond when things come at you. You got to know how to throw things out there at the right time. Some things are appropriate, some things are inappropriate. It depends on the conditions and what's going on. And that's what I know, and that's why I've been so successful. And so if you want to get in the mentorship, I urge you to take the mentorship survey. You can see the links below. And also you can jump in, sign up for the webinar too. Anyways, I'm busy managing my portfolio, but I'm wrapping things up right now, and I'm going to be I still take time. I mean, every day I take calls and texts from my students, because that's the difference. Believe me, if somebody just hands you a book, shit, you're going to learn this shit off the internet. You're not going to learn it. I mean, you can learn some, but it's not like having somebody that's got your back. It's like customer service, right? You call up, you have a problem, they quickly tell you how to fix your computer problem. That's kind of what I am to the people that are investing in real estate right now. And it's a great opportunity for you. It really is. But that's it. I enjoy it, and it's been fun. But let's talk about what to sell, right? What to sell. So I called my CPA last night, and I told him, I said, hey, listen, I think I'm going to dump a couple properties. I'm going to sell a couple to my kids. And so, when it comes to selling property to your kids, they're going to get the deal that I got. I buy everything under market, so there's nothing I can't sell that's, not a good deal. Everything I can sell at a good deal. And that's the advantage you get when you buy things under market, is you have that hedge against things going down. And things are going down a little bit. I've got the property I'm sitting in front of. This was valued at $467, I think, on PropStream. I figured I'd sell this probably for about $500 if things stayed the way they were staying. Well, they're not staying the way that they were staying. So things are starting to fall down. So I'm going to leapfrog while things are going down. I'm going to jump and sell down here because things are probably going to get down there eventually anyways. So I'm making a deal with one of my tenants, and I'm very open. He's probably watching this right now. And it's just a matter of just money. People are looking to park their money. Some people can park their money in bonds right now for 4%, but that's not for me. But again, so let's just do the math. How do I decide what I'm going to sell? Well, what's important to me is I need to know what my basis is. So this, I get confused. I have a lot of property. A lot, and I don't. Sometimes I think I have it straight in my head, and I don't. Of whether something, so I need to know what my basis is. Because in other words, I may have made $1 million on something in the past and bought 3 houses, and my basis is 0. So my basis could be 0 in any one of these assets that I'm looking at, because I deferred capital from a sale where that was down to 0. So what that means to me is if I sell something, say for $400,000, this is kind of a deal right now, my tax penalties, or my responsibilities, if you want to call it either one, are going to be, pretty much, I'll be paying, even with short or long-term capital gains on this one. Everything's been over more than a year that I'm selling, of course. Are going to be pushing probably 27%. Short-term capital gains, you go into a higher bracket. If you make over $500,000 a year, I think that's the cutoff. Then your capital gains, they bump up a little bit. So what I'm looking at is selling properties that I don't have a 0 basis in, something that and so I've got properties that I've just paid cash with money that I have, and I've got other ones that I've deferred into. So I nailed it down to, I got 3 houses I can sell, this being one of them. This one, I think I paid $300. It's worth, say, $400 when I sell it under market, but the basis is $200. So if I make $200,000 on this, I'm gonna forfeit about $50,000. That's the other ones that I've got. Same thing. I'll pay a little gain on that. But the best part about the other ones that I'm selling, I paid cash, so the basis is based at what I paid for it, plus the money that I put into it to fix it up. Like this one's got new cabinets, it's got new floors, it's got new everything. This one also next door, pretty much. And in fact, I'm gonna head out, and then I'll take you by. So like I've got another one I'm coming up. I'll drive up to next. Now this one I'm gonna sell to my daughter. I actually have 2. That one is, 200, and it's probably worth more than that, a lot more than that. But I'm gonna sell it to her for roughly what I paid for it plus what I threw in it. So it'll be a very good deal for her. And same with my daughter, a property I just bought recently. I'll sell it to her for what I paid for it. And it's kind of okay, good. Kids got a couple good assets. And listen, I can spoil the shit out of my kids. I'm not doing it. By the way, you can see, let's take a quick bite. This is actually a house. This one actually I might sell to my tenant. This one right there, this big fence, which actually needs a little love. Anyways, again, this is a really nice home. It's actually one of the nicer ones I didn't want to sell, but I like my tenant, and he likes living there, and he also rents more than one property from me. He's a big customer. Thank you, Sam. And oh yeah, and here's the one I just bought recently. And it's funny how, like I tell you, look at these. Look how close these properties are to each other. This is how the story of my life. Everything is near. And that's what I teach you. That you got to learn. The deals are nearby. You know, here's the other one I just bought. You can see the. Let me see. You can't see through it because they're painting. They were painting in there yesterday. This one's actually getting new counter. New crystal quartz. It's getting new white quartz countertops, and so I'm going to sell a place that's worth about probably worth $360, but I'm going to sell it for what I have in it, which is about $320 to my daughter. And I got another one, like I said, another one that, you know, anyways, the kids are going to get a good break on these, and I'll still be able to throw some cash. Although I'm going to owner finance this one for my daughter because the rates are just higher than I want her to have to deal with. I feel a little bad. I should have put her in, got her in a little earlier. Not my fault though, but you know, just timing. And then so sell one, pay $50,000, have $400,000, so I have $350 clean on that. Sell this. This is owner carried, so I'm not going to get anything out of this. I'm just going to have a note coming from my daughter, low interest for her. And then the other one, I'm going to sell that. That'll be $400,000, and I'll pay gains on about $100 because that's what I'll make on that one. So yeah, 400, 800, 800 less. 75,000, so there's 725. My other daughter, I'm going to sell her one for $220. Gets me $950,000 that I can just put in the bank, and this is money that, and I may just take it and pay off a couple of mortgages that I feel are a little bit high. But I'll still have the power to pull money from those assets in the form of line of credit, revolving line of credit. So that's the stuff that's important to me. It's not important to me that I have cash. It's important to me that I have the ability to raise cash if I need it. And that means have good rapport with the banks. They know I'm no fool. They know that I will make good decisions. And that's really where you want to be with your own bank, is you want them to trust your judgment. And of course, it's always trust but verify. That's how it always is with all banks, and that's a good thing. Some of you guys get yourself in trouble if a banker didn't say no. If he said yes, you know, you both would be in trouble down the road. So just keep in mind that can happen too. Anyways, what else? What's going on out there? Let's see. Morning, Chris. Find yourself a hot girl. Oh yeah, all the spam. Anyways, anybody, what's on your minds out there? I know most of my followers work. They're at work. Anyways, it's gonna be a fun time. It really is gonna be cool, and it's just gonna be a very fun time coming. Oh, we had bad reception. Yeah, I gotta get out of here. Yeah, I apologize. I'm sure it's crappy. But so, like I said, wrapping up these houses, new floors, new tile, new tenants, new owners. We're gonna throw one on. We're gonna list one on with my daughter. She'll sell that, and like I said, it's. I just wanted you to get an idea of why I'm selling these properties. And again, let's talk about it. I'm leapfrogging. I'm selling them for a little less than I could sell them for. That's to get rid of them, get the cash. Maybe things will go down a little bit. Maybe they'll level off, and you know, either way, it doesn't matter. It'll still be a decent deal for buyer and seller in this case. And then because I don't need to hold on to a property if if it's going to sit idle, sometimes it makes sense, sometimes it doesn't. For me, though, I just assume put the cash away right now, and I'm looking to buy some big centers. I want to buy something, like 8 million would be nice, something like that. 5 to 8 million. I've been trying to look at some properties in that price range, and but the money keeps getting more expensive to borrow, and I'm probably going to put 30% down. So if I can put 2 or 3 million down, I also have another tenant, just like you see these houses where I've got tenants that are willing to buy the property. I have the same thing going for me with some commercial buildings and offices, and those tenants. In fact, I sold one a while back. If you can go back, I don't know, maybe a year or so ago, you'll see that I did the same thing. I had a tenant, not a tenant, I shouldn't say. I had an investor that already bought the building next door to me, wanted to buy mine as well. I said, man, I'll sell it to you. And we agreed on what was roughly a fair price at the moment. Understood that it could change with market going up or down at that point. I said, I'll give you first shot at it. And he said, well, I'm ready. I got the cash. And he did. And so when I found something I wanted to buy, in this case, I found another building for 2.8 million that was worth about 3.5. So I got it tied up, went to him, and I said, okay, hey, let's do it. I'll sell it to you. And we agreed. I think I sold it for $1,725,000. And so I took that $1,725,000, coordinated the sale of that asset. By the way, that $1,725,000, that was a building that I paid $240,000 for, and I put maybe $100,000 in it. But that's the kind of money you can make. So I rolled a purchase that I paid $240,000, sold it for $1,700,000, put it into a new building that I bought for 2.8, that's worth 3.5, and so you start doing the math on that. There's over $2 million made just in that span of time, and now that $2 million is bringing me in somewhere around, I think I got about if I do it based on what I paid for it, I probably have a 9 cap. If I do it based on what it's worth, it's probably a 5.5 or a 6 cap. But either way, there's a lot of money made, and and right now it's cash flow. I've got a return on my investment. I've got good solid tenants that have been there anywhere from 14 to 20 years. This is a really good solid tenant base. People that have been there for a long time. In fact, the one that's been there the longest, if I have any concerns at all, it's about them retiring. But they'll probably sell the company because they have a good business anyways. I'm talking about the oldest one in that particular deal. It's just something you look at. I remember I was watching a Ben Muller video, and he was looking at a property, and the comment I made in there was, I'd be worried about, this guy looks pretty old, and that's one of the things we have to consider is how long is this business going to last? If the guy's 65, 70 years old, he may be throwing in the towel here pretty soon, moving to Florida, or croaking. You just don't know. But these are things you got to think about as a landlord. Is what's the life expectancy of the business and or the proprietor, because they're pretty much tied together. But I'm really, really happy for everyone in the class. Everybody's gotten their money, made their money, and nobody's thrown into something they regret. And that is power, folks. And that's what hopefully we'll all be, just coming out smelling like a rose as things get worse and things start going back to the bank. People start doing short sales. That's kind of what happens. This is the period of time where people will start to fail, and as they fail, we get to come pick up the pieces, and that's kind of how it works. Somebody loses, somebody wins, but it's nice if all of us as individuals can pick up the pieces of the people that broke up, rather than one big corporation or a big syndicate coming in. And most syndicates aren't that smart anyways, to be quite honest. I love it. The agents, brokers, the inexperienced brokers, they'll say, oh no, this thing's gone. We got a big group. They're buying it. This group's buying it for Walgreens, and this group's buying this for Eckerd's. And I'm like, I love it. Count me in as a backup offer. This thing's gonna fail, 100%. It's gonna fail, whether it does or not. That's my attitude. But guess what? Usually I'm right. It does fail. Because here's the deal: when you have a group, when you're bidding against a group, and I'm a group of one, I have all the decision making. I know if I say I'm going to buy it, I'm going to buy it. If I want it, I know I want it. The groups don't have that power. The guy that came out there that found it says, hey, I think this is a good deal. Then they run it by 5 people, maybe 10 people, and then they go, half say, we don't like it, or half say, we like it. But either way, they're not buying it unless there's about, an 80% or 100% vote to buy it. So the chances of that falling apart and not happening are very, very good. So never feel discouraged when you're in a situation where you're bidding against a group, or they're trying to decide between you or a group. You just got to point that out to whoever you're going against. Say, listen, it's going to fail. They got too many people they're dependent on. There's too many legs on that table. Where me, I'll take it. It's a done deal. Demonstrate you got the capacity to pay for it, and you're golden. You'll take it away from somebody else that might appear to be bigger and stronger than you. It doesn't matter. Listen, somebody might have power. Maybe they have 100 million. Maybe they're 100 million strong, but buy it, and that you are certainly going to buy it for sure. And there's no concerns of you bailing out. Then that's power. The people want the strongest buyer. They want the guy that's going to close the deal. I've often refer to that property I bought. It was an old school. Bought an elementary school from the school district, and it fell out twice. And each time they didn't take my offer. They took a larger offer, but the bigger offer never came through. And so after it fell out twice, I said, I wrote a note. I said, hey, listen, stop taking the highest offer and start considering the offer that will close, and that's mine. And sure enough, happened again. We go up, and they said, Tom, you're close, but you got beat out by 50 grand. And I said, well, look, let's just understand that I'm a backup offer then. And this is an auction setting where normally I'd have to reset and do an auction. In other words, if whoever they picked to buy it out of that silent auction, if they would pick that person, and then they go forward, and then it would fail, and they'd have to hold another silent auction, lose a couple months time again. And so on the last time I said, hey, again, like I said, stop taking the highest offer and start considering the one that'll close. And they listened to me, not completely, but they kept me in mind. They said, well, we got somebody that beat you out, but we're going to hold on to your number and let you be a backup offer. So now I had a significant advantage over everybody else. And this is gold that I'm giving you, by the way. And so what ended up happening in the end is, I remember I was on the beach, I was in Hawaii, on the sand, and I called, I'm still business everywhere I go, but I got, 4 kids, and we're at the beach, and we're enjoying ourselves in, I can't remember, Maui or something. And I called up, and I said, Hale, what's happening? He said, Tom, it should be a done deal, money goes hard tomorrow, whatever. I said, all right, well, call me. And he couldn't believe that I was still so optimistic. I said, I'm not giving up. I'm here. And I didn't think I was going to hear from him. He was so convinced it was going to close. He almost had me convinced it was going to close. And I had him convinced that it wasn't going to close, because we're both standing on. He's being positive about his deal closing. I'm being positive and optimistic for myself that his deal's going to fall apart. And now he's questioning, so anyways, but he's pretty confident. At least that's what he's projecting. Next day he calls me up, and I go, I recognize the number, and I go, hey, Hale, what's up? He said, they're stumbling. And I go, all right. And he said, look, he goes, your offer is quite a bit lower. He goes, do you want to sweeten your offer at all? He goes, it's going to go back to the board, the offer you put in, but no guarantee they're going to take it. But it looks like this other one's definitely going to fall out. And I said, nah, I'm staying on my numbers. That's it. And then he said, okay. And then we get off, and then about 5 minutes later, I'm like calling him up. Let's say, let's add 50,000. Let's make it a little tiny bit better. So I wanted to give them the board. I didn't want to give the board any excuse not to close. So I got weak, and and I think it was the right thing to do. Maybe I left 50 on the table that I didn't need to, but it doesn't matter. That's a fantastic asset that I got, a fantastic asset. And it does nothing but make money. I still own that property today. And again, these are the kinds of things in negotiations that you're not going to be able to just, I mean, if I wrote down all those points and some of the stuff that I just shared, this book would be 20 times this size. And that's what you get out of the mentorship, is you get a pull from my experience and my expertise. And that's one of the things I do best, is negotiate. And that's actually a good example. So I'll probably delete this video when we're done, after I'm done here. But those of you that watched, listen, get in the mentorship if you can afford it. And listen, if you're one of these guys, fortunate enough, you got a good job, you put some money away and you've saved, and you want to you want to create that generational wealth. And listen, you got to do something with your money. It doesn't matter how much you make, really, unless you're making millions of dollars a year. Your lifestyle isn't going to be that great unless you have that cash working for you and compounding and growing. That's the most important thing. So anyways, that's it. Somebody just wrote, okay, Chris wrote, current deal I'm looking at, why would someone want to sell their building and do a triple net lease back for 5 years? Well, but what's the initial cap rate, Chris? What's the cap rate on the beginning? Listen, strategically, you may. I bought a building. I bought a building about a year ago, a 17,000 square foot industrial building, and I bought it, and the company rented it back from me. So, what's their motivation? They're slowly getting out of business. And rather than sell the asset at the end of the, when they close or when they sell off their company, they're selling the asset and they're planning ahead. So it's not uncommon for people to do seller lease back. Now, sometimes it can smell, because the last thing you want to do is make a deal, a seller lease back, and then they walk away. Because think about it, if you were a conniver, and there's a lot of conniving people out there, you could set it up where, yeah, I'm going to rent it back from you and give you a 15% cap on your money. It's going to be great for you. And then, the person buys it, the seller gets the cash, and he stays in business 3 months when you planned on him being there 5 years, and you don't have any recourse. So you got to be careful not to put yourself in a position where they can walk and you don't have any recourse. So just something you got to be really aware of. Anyways, we'll see y'all later, and again, hit that subscribe button and hit that like button if you care to, and but be sure to get this book, Wake Up and Smell the Real Estate. But go take the mentorship survey, and I'm only going to take another 100 mentees, and then I'm going to cut it off for a bit, and I'll cut some deals with some of you. Just get in the mentorship, fill it out honestly. I'll have a call with you. And you got to have the book. Buy the book, though. I can tell you, if you tell me you want to be in the mentorship and you haven't bought the book, go ahead and fill it out. But expect to hear me tell you, buy the book. Because really, it shouldn't take you very long. You can go read the first 3 chapters free anyways. And believe me, there's nothing like it. There's nothing better. You're 30, 40, 50 years old. And, you got kids. You got college coming. You got retirement coming. This is the way. This is the way I did it. This is the way I was secure in my 20s. I was already secure enough in my 20s for the rest of my life. And it just gets better from there. And so now this is 41 years of deal making and successful deal making. And it's something to learn. And thank God I got fantastic students, and they're providing for themselves and their family, and everything's beautiful. And congrats on Russ yesterday. Russ wrote me, he closed his deal yesterday. He just picked up $1 million building for $350,000. And these are the kinds of deals that are out there, and there's going to be more coming. but it's going to be trickier. It's going to be a little bit trickier. It's going to require some more patience right now. Anyways, that's it. I got to run my Porsche I got my Porsche. I got to run over to the dealer, my Cayenne. It's due for its service. So we'll see y'all later.